Assalamualaikum warahmatullahi wabarakatuh. My name is Dania Imad binti Jafi Imran, metric number H204030519. I will present about my part. ENO stands for Eastern and Oriental Berhad. ENO, one of Malaysia's leading premium lifestyle property developers. Eastern and Oriental Berhad, it's a public list company on Bursa Malaysia and is widely recognized for developing luxury lifestyle properties and hospitality assets. As shown on the slide, ENO was established as a list company on Bursa Malaysia and has built a strong reputation in the Malaysian property industry over several decades. ENO activities are driven by four main growth engines in Kuala Lumpur, Penang, Johor Iskandar, Malaysia and Central London. One of ENO's biggest strengths is its niche market positioning. Unlike mass market developers, ENO specializes in luxury residence, waterfront developments, integrated lifestyle community, and premium urban developments. For example, Seri Tanjung Pinang at Penang. Apart from that, capital incentive business, property development requires substantial capital investment before any revenue can be generated. Another important issue is cash flow dependency. This creates a timing gap between cash outflow for construction and cash inflow from customers. Therefore, ENO relies heavily on progressive billings, customer deposit, and bank financing. Lastly, macroeconomic sensitivity. Several external factors can affect performance, like interest rate risk. When interest rates increase, mortgage loans become more expensive, property demand may decline, and financing costs increase. Strategic financial implications. Management needs to monitor economic trends, adjust pricing strategies, manage debt levels, and diversity revenue stream. That's all from my part. Thank you.
Assalamualaikum, my name is Al-Adrana binti Muhammad Rosid. My metric number is HFT20303. This slide shows the company 5-year financial trajectory based on a 4 key finance ratio: liquidity, profitability, efficiency, and leverage. First, liquidity remained relatively stable over the 5 years, showing that the company still has a sufficient cash and a current asset to meet its short-term obligation. However, some funds are piled up in unsold property in inventory. Second, profitability experienced some fluctuations due to cost pressure, but overall the company has shown strong recovery in net profit and a shareholder return towards an end of the period. Third, efficiency improved significantly, especially after 2023. This indicates that the company is managing its asset and reachable more efficiently to generate revenue. Finally, leverage remained stable through the 5 years, suggesting that the company maintained a moderate and a controlled level of debt. Overall, this financial performance showed a positive progress with a strong improvement in efficiency and profitability while maintaining stable liquidity and leverage.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Aliami Sarah binti Jamaluddin. My metric number is H20483074. I will present about liquidity, which is healthy reserve, obscure, and inventory burden based on our company report. Based on the graph, current ratio average healthy margin decreased slightly to 1.69 times. Meanwhile, the quick ratio dropped to 0.84 times, indicating liquidity tightness without inventory sales. The safety net is every 1,000 ringgit of current liability in 2025. ENO has RM 1.69 in total current asset. The inventory trap, removing inventory drops the 2025 ratio below 1.0, which is 0.884 times. That's all for me.
So, next I will explain the profitability performance of ENO from 2021 to 2025. So, looking at the graph, we can see that the company gross profit margin show a declining trend, dropping from 55.10% in 2022 to 41.35% in 2025. This decline was mainly caused by increasing construction and operational costs. However, the company managed to improve its net profit margin after dropping to 17.2022% in 2023. It increased to 24.52% in 2025. This shows that E&O was able to manage costs more efficiently. In addition, the company return on equity or ROE increased significantly from 2.20% in 2023 to 7.28% in 2025. This indicates that E&O generate better return for its shareholder and create more value for investor. So overall, although the company faced rising costs and margin compressions, its strong cost management and efficiency improvement helped maintain profitability and enhance shareholder value. So that's all from me. Thank you very much.
Hi, Assalamualaikum. My name is Nurul Melafatia binti Mariping. My metric number is H24A3491. For this slide, I will explain the efficiency or activity ratio of Eastern and Oriental Berhad from 2021 to 2025. The efficiency ratio shows how well the company uses its assets and resources to generate revenue. Firstly, the inventory turnover ratio increased from 0.1345 times in 2022 to 0.7590 times in 2025. This indicates better inventory management and faster movement of inventory. Secondly, the total asset turnover ratio improved from 0.0418 times in 2022 to 0.1619 times in 2025. This means that the company become more effective in using its asset to generate sales. Lastly, the account receivable turnover ratio also improved significantly, showing that the company was more efficient in collecting payments from the customers. Overall, this ratio showed that Eastern and Oriental Berhad improved its operational efficiency, especially from 2023 onwards. The company managed its inventory better, collected receivable faster, and utilized its asset more effectively to support business growth. Thank you.
Next, 2026 pro forma, which is projecting 10% sustainable growth. For 2026, projected unit revenue has RM 815.19 million. Cost of revenue has RM 478.11 million. Which is gross profit for this company has RM 333.07 million. In operating profit has 230.86 million ringgit. And overall, projected net profit is RM 176.14 million ringgit. Strategic outlook for this increased sales volume is projected to outpace rising administrative and financing costs, yielding a highly stable and sustainable bottom line. That's all from me. Thank you.
Assalamualaikum and hi. My name is Nurul Izzah binti Muhammad. My metric number is H24A3592. This slide shows three key risks to the company's future growth in 2026. First, a property market downturn could slow sales and create cash flow problems due to high inventory levels. Second, profit margin compression is a concern because rising construction costs and inflation have already reduced the gross profit margin from 56% to 41%. Third, interest rate exposure may increase financing costs as the company uses debt to expand its land bank and develop new projects. Overall, this risk could affect profitability and growth. So, effective cost management, debt control, and market monitoring are essential for long-term success.
Assalamualaikum. My name is Nur Nadia Fahana binti Muhammad Nasri. My matrix number is H24A3772. And for my part, I will talk about the comprehensive risk management landscape. There are like 5 risk management landscape. Number 1 is market and economic. Market and economic is making sensitivity to inflation and consumer purchasing power in the luxury segment. And for number 2, the risk is interest rate and financing. Cost of capital fluctuation for debt-heavy development phases is high. And therefore, the third one is liquidity and cash flow. Navigating periods of negative operating cash flows before mega project sales are realized. And then the fourth is project and operational. Construction delays, labor shortage, and unexpected material costs. And the last one is regulatory. Zoning laws, environmental compliance, and evolving government housing policy, making this the risk for management landscape. Thank you.
This slide presents the strategic imperatives that Eastern and Oriental management should focus on to ensure sustainable growth. At the center is the engine of growth, which represents the company's overall growth strategy. First, capital allocation. Eastern and Oriental needs to invest its resources wisely by selecting profitable projects and strategic land acquisitions that can generate long-term returns. Second, cash flow management. Since property development requires large upfront costs, effective cash flow management is important to ensure the company has sufficient funds to support its operation and ongoing projects. Third, financing structure. The company should maintain a balanced mix of debt and equity financing to support growth while keeping financial risk under control. Finally, shareholder value. Eastern and Oriental must focus on improving profitability and business performance to increase returns for shareholders and strengthen investor confidence. In conclusion, these 4 strategy imperatives work together to support Eastern and Oriental long-term growth and financial success. Thank you.
Assalamualaikum. My name is Nur Hasna binti Muhammad Rozi. My matrix number is H24A2966. Let's look at the Eastern and Oriental Financial Hub Diagnostic. Overall, our financial hub is strong, but we have one main challenge, liquidity, which is at moderate risk. This is simply because we have too much money tied up in unsold properties. But on the bright side, our profitability and efficiency are doing amazing. Both show a strong upward trend because we are making better returns and we have successfully overhauled our payment collection. Lastly, our leverage is highly stable because we are keeping our debt strictly below 35%. In short, our great operational efficiency is successfully balancing out our liquidity risk.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Ain binti Ahmad Kamal. My matrix number is H24A2862. So, this is slide show that our executive conclusion. First, E&O has a stable financial position and can meet its financial obligation. Second, the company can improve the performance and efficiency in 2024 and 25. Finally, E&O is expected to grow further with a project increase in review in 2026. Overall, the company has a positive future outlook. So let's back to me. Next, it's slide show our strategy for our company recommendation. First, increase inventory sales to improve cash flow. Second, control construction costs to protect profit margins. Third, use fixed rate financing to reduce interest rate risk. Finally, maintain a deep discipline to ensure long-term financial stability. That's all for me.